Bitcoiners, welcome back to FedWatch, on with Ansel again. And we actually hosted a panel today. This was the deflationist panel. It was based off of Aaron Segal's article, The Pitfalls of the Inflation Narrative. And as you guys know, Ansel, my co-host, is a staunch deflationist, but we brought on Jeff Booth and Aaron, who agree and disagree with Ansel on some of the details, but for the most part, directionally, they are all kind of in the camp that Bitcoiners are relying far too heavily on this like hyperinflation idea. And they see that could potentially, lead our community, lead some of the Bitcoin narratives to have some egg on its face in the short to medium term. None of that can stop Bitcoin. Bitcoin's unstoppable. But obviously, we want to be directionally correct, and we want to be as correct as possible in our investment thesis in Bitcoin. Ansel, I'm going to hand it off to you. What was your take on this episode?
Oh man, it was great. It was great to. I think it's an important episode for people to listen to, being that we are deflationists, but from different sides of the aisle here on deflation. Me being the monetary side, and Jeff being the technology side, and Aaron also being the technology side. I think that it's important to be right for the right reason. And if you're right for the wrong reason, you're going to end up getting wrecked. And so I think that we are bringing a skeptical mindset here to this content, and I thought it turned out really great.
Yeah, I thought so too. And Jeff and Aaron kind of interviewed themselves. So, they just kept going with some really fantastic, just takes and explanations into this very nuanced system.
We should have two guests on every time so that they can just interview themselves.
We got to get the right panel though. And this panel was absolutely fantastic. You guys are going to absolutely love it just as much as Ansel and I. And without further ado, let's just get right into this podcast. Bitcoiners, I'm super excited to have a jam-packed and absolutely stacked panel here to talk about everything that's going on in macro. First, I have a newbie to the show, but someone who's been contributing a lot to the macro conversation and to Bitcoin Magazine. Aaron Segal, welcome to FedWatch.
Thanks, DK. Nice to be here.
So, Aaron, I guess real quick, why don't you just give the audience a brief overview of what brings you to the Bitcoin space?
Just briefly. My background is in finance. I've been in the investment community for the last 17 years, roughly, working in the hedge fund industry. I've worked from a range of kind of macro investing to very specific credit investing in corporate debt, investing in stressed and distressed companies, as well as just typical equity investing, buying, shorting stocks. But I got my start in kind of this macro world. I actually got my start trading currencies. And what led me down to Bitcoin was a little bit of a roundabout road, but just in short. And back in 2018, when I started seeing the Fed trying to attempt to unravel or unwind QE after essentially, failing to do so for the previous 8 years, I started seeing the makings of what I thought could be a repeated pattern of kind of the late 1960s, early 1970s. And that led me to start investing a lot in gold and thinking of ways to kind of prepare for an inflationary decade or some kind of inflationary secular period. But I hadn't yet read Jeff Booth's book. And also as being an investor for the previous kind of 12 to 15 years, just like everybody, we were all perplexed at how QE failed to generate inflation, how we were still in this kind of disinflationary environment, how we couldn't really hit escape velocity. That was a common word on Wall Street. Like, how come the economy couldn't really ever reaccelerate despite the Fed printing money on all cylinders? So this was kind of the background state. And then basically 2019 came along, and bank reserves had gone from over 3 trillion that had built up from the period of QE all the way down to like 1.7 trillion. But for context, bank reserves prior to the great financial crisis were essentially zero. And going from 3 trillion to 1.7 trillion apparently destroyed the money markets. It destroyed the liquidity in the system. And that really, was a wake up call to me. And that's when I started looking at gold. And I had been investing in Bitcoin since the 2016 2017 cycle, but not really in depth. And then fast forward to March of 2020, obviously all shit hit the fan essentially, and uh, I was and continued to be an investor in gold, but I started to see that gold wasn't reacting the way it should, given the backdrop. It wasn't. It certainly was starting to perform well, but it wasn't performing in the way it should, given everything, all the insanity that was going on. So I said, as someone who's trying to be intellectually honest, I said, okay, I need to understand Bitcoin better because there seems to be something going on there. And I need to understand how Bitcoin can quote unquote be taking market share. And fast forward a couple months and I sold all my gold. I was, full Bitcoin maxi. I had gone like head first down the rabbit hole. I'm a very, like obsessive compulsive person. So once I do something, I go kind of all in. But essentially I realized that, and this gets back to some of the conversations CK, you and I've had in the past where, and it kind of led me to write my first article, which was that, Bitcoin was so much more than just digital gold. If it was just a kind of a better gold, I don't think any of us would be so excited. Any of us would be just kind of devoting our personal lives and being so enamored with it and so positive about the future and perspective future, because gold doesn't solve anything for the future. Gold is a relic of the past that has had its place in time, but really has outlived its staying power and can't really handle a lot of the problems that we face. And I think, in today's conversation, we can get into some of those problems. But that's the long-winded way of how I kind of got into this world and haven't looked back.
I think that was really good context, Aaron. So thank you. I'm sure Ansel has some thoughts about your kind of like journey there. But you mentioned Jeff Booth. That he's our second panelist. Jeff, you wrote The Price of Tomorrow and really kind of like started putting into context these like diverging forces of the monetary system and technology. Why don't you kind of just briefly introduce yourself? The audience has already heard from you many times before, but just the quick elevator.
Yeah, so I'm going to keep this super quick because we should listen to Aaron more. He's a really great new voice to the community. So this, what Aaron talked about in the book is something that I've been seeing for 10 years, and I'd love what Aaron just said about intellectual honesty and then chasing down. When you can't understand something, you need to understand it deeper, and that curiosity to drive all the way down to the bottom of something. That's really what led me to write the book in the first place, because I could not understand how technology being an ever increasing force in our lives to reduce prices was being masked by monetary policy, and I couldn't understand how monetary policy had any chance of winning that battle, because technology is a stronger force. Now it could pretend to for a long time. It could have a whole bunch of negative implications around the world like we're seeing, but in the end technology is going to win. And so for me, Bitcoin became and I had investigated every other possible transmission mechanism from one system to another, and there being no good ones, I realized that Bitcoin is inevitable. And still today, that thesis, if anything, is only stronger. It's not weaker. The system cannot change itself. We're going to talk today about a whole bunch of why it has to keep on printing and everything else. And Bitcoin becomes a transition path to a brighter future. So I'm in it. I'm in it for just all technology. How do you stop a technology that empowers people? That technology that empowers people is very hard for governments to try to stop something like that, because they have to deceive more by doing so. So this is going to be, or asked differently, when in history has a technology of empowerment been stopped? And so never. And so this is inevitable in my advice. It's just what I care about in a big way is getting more people on board, because because it is going to be a disruption between as we move from one system to a different system, and that disruption is going to be really painful for a whole bunch of people. And I'd rather more people on Bitcoin through that disruption.
Yeah, get on the lifeboat, right? Thank you very much, Jeff, for that introduction. So let's just, for time's sake, let's just jump right into this conversation. It was really inspired by this article that Aaron wrote and Jeff, you helped review, but the pitfalls of the inflation narrative. And one of the reasons I really like this is because the article hits on a lot of the narratives that have been floating around the macrosphere, right? Inflation versus deflation, technological deflation, is QE money printing, asset inflation, like all of these things that people have been talking about. You've kind of weaved them together into kind of one storyline along with Bitcoin, and it really kind of like made sense to me. So I guess, Aaron, why don't you just kind of get into the article a little bit and kind of just give the backdrop to it?
Yeah, so the high level, just the reason I wrote the article is because, I mean, as I mentioned in kind of the introduction, it's been a bit of a perplexing situation for so long. What's going on in the macro backdrop? QE is a fairly recent experiment in a historical context. I mean, we all know that fiat is pretty recent experiment in a historical context, but this has been this kind of debate on Wall Street or in the investment community, and also just in the economic circles and academia. What's going on with inflation, deflation? Of course, in very recent months, that debate has gotten much more vocal. And one thing that I started to see within the Bitcoin community and on crypto Twitter is this just kind of memeing of this inflation narrative and kind of dumbing it down a little bit. And it's not meant to be an offensive observation. I think we all struggle to try to distill very complicated subjects into narratives, and that's kind of what memes do, right? But I think it was an oversimplification and one that was dangerous to Bitcoin. And the reason I say that is because there are so many people, as we know, who would love to see Bitcoin fail and would love to see all of the narratives that Bitcoin claims to be proven wrong. And if, as a Bitcoiner, if you stick your neck out and say we are on the verge of a Weimar Republic, like hyperinflation, or not even, one step down from that would be maybe a repeat of this 1970s era type of runaway inflation. While again, as you said before, Jeff, it's good to be intellectually honest, and who knows what the future could bring, even in a deflationary environment that Jeff has articulated so well in his book. That is a very big secular kind of cycle. That is a long-term train, and within that, there can be little ups and downs. And I could envision a period of cyclical inflation that we are kind of seeing it already. But that's why I talked about seeing the forest for the trees, because that to me is not the story. And if Bitcoiners stick their neck out too far and try to marry our narrative to that story, my concern is that it can be proven wrong. And then everyone will say, see, Bitcoin doesn't do anything. It's not digital gold. We don't even need digital gold because the fiat system's fine. There's no inflation. And then you just end up spinning your wheels. So I would love to really, to me, it's important, as difficult as it might be, to get into some of the nuance of all of these countervailing forces, all the inflationary forces, all the deflationary forces, asset inflation versus end good kind of inflation, labor inflation versus, creation of debt. I mean, these are all, and then of course the technology element, and all of these things tend to, again, be dumbed down to just this one debate. Are we going to see inflation or deflation? And I would love to just shift the narrative a little to rather than talking about one or the other, talking about just destruction, talking about damage, because that's really what matters. Is the economy healthy? Like, who cares about a label? Who cares about being inflation or deflation? Let's talk about things that are good for productive value and creating more equality, more wealth, better quality of life. I mean, that's really what economics is about. It's about this, the distribution of capital to maximize productivity, and that is to me what is being hindered. And some of it might be inflationary, some of it might be deflationary, or some of it might be a lack of the ability to allow deflation to exert itself and allow value to create itself. So you could end up with an inflation level of 2% that is massively disruptive because you could have had so much more wealth created. So again, I know I'm kind of weaving a lot of things, but I wanted to give that high level I wanted to get that high level point across because I think it's important we understand why we're having this debate and why it might be kind of a misconstrued debate to begin with.
Aaron, can I just jump in there, CK? Because Aaron just touched on a couple things that are so critically important. And I totally agree. We are in a macro deflationary environment forever. That's where things are going forever. You can stop that by destroying society and concentrating all wealth and power in very few people's hands. And most people won't notice that theft while they're doing it. And because we're around labels of inflation or deflation. And so Paul Krugman came out and this same argument happened in 2008, after 2008. And Paul Krugman said, see, no inflation. See, we could get away with it. And we did all of this and no inflation. You guys were all wrong. And he thinks he's right. And so there's a whole bunch of people that looked bad because they said we were going to go into hyperinflation then, and all that's happened. So if you push prices up against the natural order, a rational business acting in their best interest, what will they do? You think they'll remove labor faster or add labor faster? And so it might take some time to drive the technology to remove labor faster, but it will happen because they have to, because we will demand prices that are cheaper. And so by running one experiment, higher and higher inflation against a natural deflationary environment, you divide society faster and faster and faster, and it must get worse. That's the structure that we're dealing in. The labels are not important. The labels are not important. The real damage, as Aaron says, is the destruction of societal values and everything else that we believe in. People believe this is capitalism. People believe this is a free market, and this is nothing like a free market. Every single price is not a free market because of this, and we're destroying the society as a byproduct. So when you have an economic theory that says economics is like today is like running your business, running your life by a horoscope. That's literally, when you have an economic theory that says prices need to go up all the time against a naturally occurring force, when you can see individual participants in a market making choices but prices go down, we want our money to be worth more. We vote every day and we create businesses that are successful because they give us value. They give us more for less. How is it possible that you can live in a society where every individual actor is trying to do one thing, but we believe that our money should be worth less each year for everyone else? The insanity of that conversation, I just keep on, wow, wow. But Aaron's point here is that inflation narrative, people are going to step into landmines, and it's going to make it look like Bitcoin isn't. Bitcoin will still succeed. It'll still attract more and more people, but it'll make a whole bunch of Bitcoiners that talking about Weimar Republic, and it won't look anything like Weimar Republic anytime soon. They'll look like they're wearing tinfoil hats, and it's not because they weren't right on that destruction of money is happening. It's because deflation is actually giving central bankers more room to hide that.
All right, let's take a quick break from that episode. I want to tell you guys about our sponsor. It is Bitcoin 2022 conference. I am sure you saw the videos. You may have been there in person. Bitcoin 2021 was an absolute smashing success. It was the biggest conference in Bitcoin history, crypto history, whatever history of the digital asset sphere. Bitcoin is number one, and the Bitcoin 2021 conference is number one with a bullet. It was an absolutely incredible time. I was working my ass off the whole time, but I got to meet so many incredible community members. And I think the best testament to how amazing Bitcoin 2021 was not just all of the amazing, accolades and compliments that I got personally and our team got, but also it's the skin in the game in Bitcoin 2022. We have already sold close to 1,500 tickets. That is more than 10% of the people, everyone who went to Bitcoin 2021 have already purchased tickets to Bitcoin 2022. We have not released a date. We have not released a city. We have not released anything. That is the biggest compliment. That is the biggest skin in the game of the community being down for this conference. Bitcoin 2022 is going to be bigger than Bitcoin 2021. It is going to be better than Bitcoin 21 in every single way. And we are going to be bringing you the best opportunity to mingle with the biggest, the baddest, the most Bitcoin people on the planet. So join the revolution. Go to b.tc/conference. Get your tickets today. I don't know what the ticket prices are. They are going up. I think they're $249 right now. We just rolled out fiat ticket purchases. All the tickets purchased before today were all purchased in BTC. So get it, guys. Get it. Get this ticket. Be at Bitcoin 2022. See you there. Bitcoiners, I want to tell you guys about The Deep Dive. The Deep Dive is a new premium newsletter from the Bitcoin Magazine team in conjunction with my man, BTCization, Dylan LeClaire. Dylan is such a multifaceted and wide-ranging analyst. He does everything from on-chain analytics to macro analysis to hash rate and all that kind of good stuff. He does it all. He breaks down everything that's happening every single day with his daily dive. He's going to dive into what is happening in the market that day. So that way you don't have to pay attention to Twitter. You don't have to pay attention to anything else. You can just pay attention to the deep dive, and he has you covered. And at the end of the week, guess what? You get a weekly recap. And at the end of the month, hey, we have a freaking report, a beautiful PDF breaking down all the activity of that entire month, what it means for Bitcoin, what you can expect moving forward. The Bitcoin market is going to moon. We are here to make sure that we maximize your stack. Go to members.bitcoinmagazine.com to sign up today. And if you use promo code BITS, you can get 1 month for free. So again, the deep dive, I've been checking it out every day, and you should too. Back to the show.
Yeah, I actually think that the labels are kind of important because we want to know if we're right for the right reason. And a lot of us are, 100% into Bitcoin, and we want to know that we're right about Bitcoin because of the right reasons. And many people out there think that we're right about Bitcoin because of inflation, right? And so I think that there is definitely value in talking about what is exactly going on with the money supply, what is going on in the macro space. So I've argued that a lot of the effects of deflation are very similar to inflation, where inflation goes, a circuitous route through the economy from the entry point to the people that last get the money, the Cantillon effect, and it distorts the capital structure and all that kind of stuff. Deflation can do very similar things, and it's very hard for us to tell which is which. So do you guys have any thoughts on that? That pushback, that labels are kind of important because we need to know if we're right for the right reason.
So I totally empathize with the idea that labels are important. I mean, that's what communication is. It's just creating symbols and maps and trying to kind of better understand the world. And we all need labels to kind of function in the world and try to understand what we're experiencing. To me, what becomes tricky about the label of inflation is that most people don't stop, just like a lot of people don't stop to think about what money is before they get into Bitcoin. How do you define money? People just kind of take it as a predetermined just thing that exists. You don't understand why it exists, what it means, what differentiates a good money from a bad money, and all those things. I think inflation suffers from a little bit of the same intellectual, laziness, where people just say, Inflation is just print or go burr. And there's a lot of different ways to define inflation. There's asset inflation, there's monetary based inflation, there's price goods inflation, there's commodity inflation and things like that. And when they're all kind of moving in 100 different directions, the narrative can easily become confused, and it can easily become whatever you want it to be. So if you are in, if you have a certain narrative that you want to adhere to, you can easily find evidence to point to that. And I love like lumber. Okay, here's a great example. Lumber prices, I'm going to get the numbers wrong, but they were up like, I don't know, 50, 60, 70% year to date from like January up through maybe they peaked around April or May. And now they've like just completely plummeted since then. Now, if you were part of this kind of Weimar inflation narrative, ranting about that and pointing to lumber as like your your poster child for all of that, then literally it just took a month for you to kind of look a little silly. And who cares how you look? Like this isn't about people's reputations. This isn't about making someone feel silly or not. This is about just kind of understanding the situation better. But so there could be inflation. There could be pockets of inflation like you see with lumber. And that's very clear and that's very obvious. And people can really latch onto that. That it makes great headlines. But there's so much more nuance. And just as we learned with QE, that printing money doesn't necessarily, and creating bank reserves doesn't necessarily lead to the type of inflation that we previously had understood to be the definition of inflation at the time. We now have to change our definition of inflation, okay? And I think that's an important thing to talk about. What does asset inflation do? Because people tend to think consumer goods and services inflation is bad because that really is, as we all know, it's a tax on people, right? It's, just like higher oil prices is a tax. And people who are at the lower income quartiles of society tend to be hit even worse by that. So it's a regressive tax at that. But people don't also realize that asset inflation is just as detrimental. It's just in a much more insidious way. And it can take a lot longer to play out because at first it feels great, but it starts to create lots of entropy and it starts to create lots of misallocation of capital. And those can actually end up being deflationary and not the type of deflation that Jeff talks about that is a good deflation. It's deflation because it's just wasted capital and basically you're weakening the system's capital stock because no one's actually investing in new productivity. People are just gaming the existing system to maximize current return on capital. And so while I totally empathize with what you're saying, I just think if we're going to have that conversation, if we're going to use the labels, then let's dig as deep as we did into money with the terms inflation. And let's be intellectually honest with ourselves about what those terms mean.
I think if I was looking this kind of at a macro framework, the highest level to this point, what are the first principles? What Aaron just said is typically when you hit too much debt, quantitative easing in a society, you go to deflation anyways. You forget technology because you steal capital from productive uses and you put them into. So that's a part of this story. And you can look around the world, whether it's Japan, you can look around the world. Once you hit a certain tipping point on debt, to be able to you tip to so more debt requires you to move to deflation because you're pulling stuff into to pay back that debt at some point in the world, or writing that off either implicitly or explicitly, and either way. Add where technology is going. Here's what I think people on the inflation deflation debate miss, and probably the primary thing. What if we're not measuring from zero? So we're not measuring from zero. We're measuring I'll bet you 30 years ago, when technology was just starting to make more of an impact in our lives, we were measuring from -1. And the free market would have looked like disinflation at -1. And so what happened is governments had to lower interest rates, kept going because they couldn't get growth up past 2%. They couldn't get to 2% because they were dealing from a base of -1. And all of the tiny little things that were happening, some things were going higher, creating bubbles, market bubbles, first in the tech stocks, then in the real estate market. Those are all, as Aaron said, micro things in a macro environment. And then it didn't go from negative. And then as technology is making more of an advance, it wasn't measuring from -1, it was measuring from -2 and -3, everything else. And so now I change the rules of what core inflation is, and so I'm not measuring all of the things and everything else. And so people are so confused on this, and we might now, right now, the actual rate of you. It's impossible to know right now what the actual, because you'd have a debt unwind and the entire system would reset. So you'd have a deflationary depression, and why the governments cannot stop doing what they're doing. Like I really empathize right now. They missed the market just like Blockbuster missed the market. And once you miss the market, there is nothing you can do to change Blockbuster to be Netflix. You have 9,000 stores, all of the, and now movies could be downloaded like that. And it changes how you created value and everything else. That's what's happening to the financial system. And there's nothing possible from the existing system that can stop that from happening. And it needs a transition mechanism. Most times when this transition mechanism happens, historically looking, it's war and a reset. And that reset comes against new central bankers and says, I know we disobeyed the rules of money last time. This time, trust us, we won't. Right? And that you have a reset of the entire financial system. What Bitcoin is nobody can do that again. And so, but it's going to transition into a hard money system on Bitcoin that takes that power away from rulers. And hopefully, if enough people come onto Bitcoin, then it can happen without a transition through war. But you have 3 paths, and I wish there was others, but you have 3 paths. Path 1, centralized economies, and that every economy looks like China, but with artificial intelligence and robotics. So very few people control all the power and domain over everyone else. That's one path, and that is the path we are on right now. Path 2, revolution, war. And path 1 and 2 might be on the same, those things happen along that axis on path 1 and 2. And path 3 is Bitcoin. And something moving to a free market. And that's how important, when Aaron talks about how important this is, I could care less about the money I could make on Bitcoin. I care about it for a way bigger reason than this. I care about my kids. Why I wrote the book is I care about the world my kids grow up in. And it won't look like the same world I grew up in unless we face the truth on some of these issues.
I think it's very interesting that we're all kind of coming from the deflationist side, but we have different ideas of how that looks. So I'm pretty strongly on the monetary deflation side. And that's interesting that you said it's not 0, it's -1. See, I
3
see it as
years
the
ago,
opposite.
it might be -5 now.
Well, I see it as on the positive side, because when you have to repay your loans, you have to repay principal and interest. So you must have like a 2% inflation rate, else you start a deflationary spiral of the entire credit system, right? So
We
I see us
totally
starting
agree.
from,
So we
yeah.
totally agree, but that's actually why they can't stop. That we totally agree that
Yeah.
because that deflation rate, the natural rate, would reset every loan and make every loan unpayable. And so why printing must accelerate. And if it doesn't, prices fall, lumber prices fall, housing prices fall, and then they must. So why Aaron said that there was trying to taper and then there's a taper tantrum, because if you taper from, and it has to be increasing all the time to match the other side that's decreasing. And if you remove stimulus at any time, everything falls to its natural order, and that's a deflationary depression. Everything fails. So you're right.
Yeah, I would just add that debt is so key to this debate. You know, a fiat system requires debt. It feeds off of debt to sustain itself. And it becomes very much, you know, you talk, Jeff, about the inevitability of Bitcoin. The inevitability of Bitcoin you could arrive at that point for a number of reasons, but one of the reasons is because of the inevitability of fiat, because fiat can only go in one direction once it moves down a certain path. We can only create more debt. We can't just go back and say, oh, we're just going to pay off all our debts. I mean, historically, debt was allowed to be created within a contained system, whether that was a reserve-based system or a centralized system, such as a kingdom, where there would be a jubilee and they would reset all the debts because it was ordained and it was controlled by a central authority to do so. And so that's why Jeff said path number one is a path, and there's a reason that centralization and decentralization are antithetical to one another, because they can kind of accomplish the same thing, but one just does it in a really horrible way, and the other does it in a really great way, in a really beneficial way for most members of the civilization. But the debt conversation is so important to your point, which is like, yes, we need. I mean, the reason that inflation rates of 2% are banged into our heads ever since we're in university is because it is a requirement of this system. The system cannot function. And I think Jeff makes a great point, which is it's not about an absolute number necessarily. It's about at the margin. It has to be going in a particular direction. It has to be increasing off of that base, because each time the base is reset, it's reset with new debt and new debt on top of it. And if it can't go in reverse, if that debt can't go in reverse, the margin for error to deleverage is extremely narrow. And that's why all it took was a little bit of an attempt at quantitative tightening for the system to completely seize up again. Because it's not like you can go back to the way things were 8 years prior when the debt levels were way lower, and in financial assets as a percent of GDP were literally orders of magnitude lower than where they are now. So you might say, well, tapering by 10%, they're still expanding quantitative easing. They're just tapering the rate at which they do so. but that's why it's so insidious, because not only can they not go back, they can't even decrease the rate unless you start to completely deflate the assets that rate is tied to. And that, in a system that's become reliant on asset inflation as its financial food, so to speak, as what feeds itself, that makes it a preordained conclusion. And that's why it's almost laughable, like what we're witnessing right now, where the Fed is talking about, yeah, we're going to taper, we're going to do this. I mean, it's like Groundhog's Day. Like we've been here before. We've seen this movie, and yet time after time after time, we make the same mistake. I was reading through some Wall Street research this morning, which I basically never do anymore. But I want to share a quote that I read this morning because it's pretty hilarious. And I'm not going to throw the guy under the bus who wrote it, but he's a big name strategist for a big Wall Street firm. And this was in his morning research today. Quote, "It is incumbent upon financial and monetary policymakers, business leaders, and investors to forecast the future. They use quantitative models to chart the path forward, to project employment, interest rates, economic growth, profit margins, and stock multiples. Unfortunately, these models, built upon historically normal relationships, break down in periods such as this. The disparity of forecasts captured in the Fed's dot plots highlight how challenging it is to ascertain this future trend." Well, that's just the funniest thing I've ever heard, because this guy, I know this guy, and he's been in this business for, 30 years, longer than I have. And he still believes that we can predict these systems. He still believes that a central authority can tweak employment rates, interest rates, economic growth, profit margins, stock multiples, that all of these things can be manipulated. Or, they don't like to use that word manipulated, because then it's not a free market. So they instead use the word predicted. But the problem with prediction is it gives us a false sense of understanding the future, a future that cannot be predicted. And that actually, getting back to the debt conversation, that fuels more debt. Because when people feel they can game a 2% inflation rate that's going to persist in perpetuity, when people feel that they can game low interest rates that allow them to create more and more debt, and they actually have to do that in order to maintain the same level of return. Because when you inflate assets, you decrease the future return of those assets. And so the only way to maintain your your rate of return is to use more and more debt. And I just think it's hilarious that he thinks only now in the most recent COVID era has this relationship broken down. This relationship broke down years ago.
30 years.
And yeah.
This 2008. I had a business in 2008 that did letters of credit all over the world. I knew something was coming before the 500 billion was coming, because here's what happened. The counterparty risk all over the world, every bank wouldn't accept RLCs, even though they were fully funded in our bank. Fully funded all over the world. Every other counterparty bank broke down. The world stopped. And the deflationary depression that would have stopped, every financial system, every bank, every government would have failed had the Fed not put in 500 billion and then more and everything else globally. It would have stopped. And by the way, that was a small amount. Today, it's just a bigger number. And the same thing because it's based on credit. And that credit is so over leveraged, it needs more credit. It's a beast. It's a giant beast that needs more and more and more. And then we have all of the sub-arguments that are inside that argument around inflation, deflation, everything else. And that is the core argument. There is, and so now you have, what's laughable is we pretend we live in a free economy that requires printing money for everything to work. So
and it also apparently requires, sorry to interrupt, Jeff, but just to add to that, it also apparently requires technocrats who are unelected to predict the future for that.
But let's play, because a lot of people say those 12 people and everything else, and you're right. There's nothing they can do. But that's why I use business examples all the time, because it lets other people see what could people do at Kodak once they missed cameras were moving to digital. Things move to information, and that changes the economic model. That is negative GDP, as we get way more for less. Things moving to information. My CDs used to cost $19.95 per CD, and I could only buy a little bit of music. Now I get unlimited music. A whole bunch of new stars were found as things move to information, and that's $9.95 a month. That is negative GDP. How, if you try to create more GDP against the natural forces of things, you're going, and people say, people should make these decisions. They should still buy CDs, even though this is a better value. That's what they're doing. And so you have a free market trying to work on one side, us all making our own rational decisions as rational actors, and you have a manipulated market on the other side. All of these things are connected. If you think about China, what would you do if you had made essentially vendor financing for the US to buy your stuff, and you were buying their debt in return for vendor financing, and then you realized they were going to pay you back with cheaper dollars? Might you, as a rational actor, take that and buy rare earth minerals around the world? Might that cause a different problem in the world as we're moving to technology, and some of the core pieces of that technology transfer to the future are being owned by nation states that are then become, oh my God, what's happening? This is all, again, all the next steps are really predictable, and they've been predictable for a long time. What Aaron's talking about, what you guys are talking about with a whole bunch of Bitcoin community, what you have is a cheat code to understand the future. And you can make a lot of money in the cheat code to understand the future, because all your bets are in the right place. But you can also understand that cheat code doesn't just make you money. It is a necessity for us to transition to a world where humanity is going. It's a necessity.
Before we get back to the episode, I want to tell you guys about Bitcoin Magazine. Bitcoin Magazine is the oldest publication covering Bitcoin, and we've been covering Bitcoin since 2012. Y'all, I'm so proud to be working for Bitcoin Magazine. We spend all day trying to scour the internet for the top news, the top plebs, the top subjects, conversations, everything that has to do with BTC, the asset, BTC, the culture, BTC, the revolution. We are here for it. We are here for BTC and BTC only, and we want to give back to the Bitcoin community. Hit us up if you want to contribute. And Go follow us on Twitter. Go subscribe to this podcast. Go follow us on YouTube. All of the places that you can find Bitcoin Magazine, we are there. Instagram, Reddit, everywhere. We're there. We're there. Follow us for the best Bitcoin knowledge. Back to the episode.
Jeff, you brought up a great point about this being more about for your children, and I just want to add something to that. Like I can say from personal, I'm a recently new father. I have a 6-month-old child, and I don't think there's any coincidence that I came across that I really fell down the rabbit hole hard when my wife was pregnant. Last year. Now, of course, COVID had an impact. Of course, a lot of things coalesced, but there's nothing to decrease your time preference than having children. And so I think that's, if we can all kind of think about it, I'm not saying everyone needs to be a parent to get Bitcoin, but I think if you think about it in terms of its impact on future generations, it really starts to have a much deeper meaning. And to your point about just the backwardsness of kind of trying to fit deflation and technological deflation, which you do such a great job of always when you talk about this, of kind of simplifying a very complicated subject. But it's so interesting, the system that we're in and using GDP and the metrics that we use to kind of try to measure value and measure growth are so antiquated that we are now trying to fit this square peg into a round hole. And I recently was talking to somebody, another bright guy who I don't want to use his name because I'm not sure if he's comfortable with it, but he basically pointed out a funny thing about the hedonic adjustments, these adjustments that are done to the CPI number.
Yeah.
And I know this gets down another tinfoil hat potential where a lot of people say, we are already experiencing hyperinflation because CPI is, manipulated. And that's all true. CPI probably is manipulated. It certainly is manipulated. And if you looked at like the 1990 way of defining it before they tweaked the definitions, then yes, we would be experiencing higher inflation. But again, I still think that misses the bigger point because it's really just about the misallocation of capital and the misallocation of resources that's happening here. But to the point on these hedonic adjustments, which basically is a fancy academic way of describing how products are qualitatively changed in order to account for changes in their quality. So, for example, you have a computer, and let's say the computer, just to make this example easy, is $100, and it doesn't change in price, but it becomes, because of Moore's law, because of whatever, all of these innovations that are occurring around its ecosystem, its power increases by 20%. So the hedonic adjustment there would be, it's actually 20% cheaper. Even though the price hasn't changed, it's actually 20% cheaper. And that would seem kind of like a logical thing to do, except for the fact that the adjustment is not factoring in the GDP part of the equation that you're referring to, Jeff, which is that because it's 20% more productive, it's going to allow for more GDP, or not even necessarily more GDP, but more productivity. May or may not show up in GDP. Yep. But so you end up double counting. You end up taking something to make it look less inflationary, and also hoping that it benefits your GDP. So you're trying to, when we talk about a nominal GDP and a real GDP, we're taking a number and we're subtracting inflation from that number to get a quote unquote real number. And so you're trying to decrease the number that you're using to subtract from, but you're also trying to increase that base. So it's a really perverse form of double counting. And even if that wasn't the best way to describe it, I think the best takeaway from that is that our system doesn't know how to account for these changes. And so we're just kind of winging it and using all sorts of arbitrary measurements. And the crazy part is people just take those measurements as gospel. And we base massive amounts of decision-making and bureaucracy and technocratic decision-making based on these ridiculous numbers that if we just kind of took a step back and thought about it from a first principles perspective, we would see that none of this makes much sense.
Well, Aaron, let's take it back to Fed action specifically. And you mentioned there a lot about QE and them not being able to taper. But something that's interesting going on right now is the reverse repos. And that is effectively a taper. Sorry, my chair just cracked. Eventually, it is essentially a taper because it is, selling collateral back out into the market. And it's effectively lowering the amount of QE that's going on, amount of collateral that's coming out of the system. So do you guys have any thoughts on the reverse repo situation, on QE, and any of these, like, kind of what people might consider money printing? Does this signal anything for the imminent future or for the next 12 months down the road? What do you guys think about Fed policy specifically? Aaron first, please.
Oh man, I was hoping you'd go with Jeff first and you could answer the question for me. Reverse repo is we can get really into the weeds. We can get really technical. And I'll be honest, like, that's not even my area of expertise, but it is an area that I've been focusing on and off for a couple of years. And I try to listen to really smart guys on the subject who know a lot better than I do. One thing I will just say is, to me, that's very emblematic about this whole reverse repo situation is, at the very minimum, it just shows you how broken the system is. That, if you're going to take one thing away from all of the insanity that's going on with these reverse, so just to take a step back, what a reverse repo is, it's when you have tons of deposits. You're a bank, you're a financial institution, and you have tons of liquidity, tons of deposits, and you have nowhere else to go. You have no assets, short-term cash equivalent assets to put it into. And so you need to find a way. It actually becomes a liability. I mean, it technically is already a liability on your balance sheet because it's somebody else's deposit, but it's usually deposits that you can utilize. You can either use that as a capital base to leverage off of and lend out, or you can use it as a cheap source of capital to then invest in financial assets that give you some marginal return above and beyond what you owe that deposit. But they've turned into a liability beyond that, in the sense that they're not just something that you owe somebody. You have to pay those back at some point. They're literally, it's like having your neighbor's, truck in your garage and you have no storage space for it. Like, you don't know what to do with it. You want your damn neighbor to take this stupid thing back. You don't even want to drive it. Like, it's just this piece of junk that's sitting in there taking up space. And so the Fed has kindly come in and said, oh, we'll give you a facility. And we'll give you this facility where you can park all that extra liquidity in our garage. And it up until, I believe, last week, when the Fed's most recent meeting occurred, they were offering a 0% rate on that. But what was happening was there was so much liquidity in the system that so many people were coming to this window. So many people were trying to park their junk in the Fed's garage that it risked kind of breaking the system and basically punching a hole through the back door of that garage. And that hole, on the other side of that hole, is negative interest rates, which is something the Fed can't really manage. It kind of would break the system in a whole different kind of way. So what they did is they actually raised the rate by 5 basis points. 5 basis points. And this gets back to what Jeff was talking about before, which is like how things at the margin are so sensitive now that a 5 basis point change in a rate offered to the banking system can cause the demand to park that money to basically double within a week. I mean, we're on track for this thing to go over $1 trillion. And I personally think we're going to see it at like 1 to 1.5 trillion at some point. But the bigger picture here is that there's so much liquidity flooded into the system, and it doesn't, and our system isn't structured in a way that can handle it any longer, and it can't go back into the real economy. And this is a great way to kind of tie up the conversation with inflation and deflation, because this gets back to the point. Well, yes, money supply was being printed at a rate of 25%. I think it's already come down to 10% year over year. And you can say, oh, 10%, that's a 10% rate of inflation. Well, yes and no. And because what's happening is that 10%, that's just cash that could literally be burned. Like, people have nowhere else to go with it. Yes, could it eventually make its way back into the system? Sure. And that would be interesting to see if that happens or not. And that could certainly create one of those little bouts of inflation along this bigger deflationary path. But the bottom line is it's just a sign of a structural problem here, which is that we are misallocating capital. There's money being printed left and right, and it has no productive value that's being used with it. So I think that's the big takeaway right now.
I'm glad Aaron answered it first. but actually, but seriously, because I have actually a hard time on all of these, because what people are trying to do is understand a complex system by a tiny little part of the system. But but most people in this whole debate are still doing that, and people think their houses always go up, and they fail to ask, would they have gone up without $185 trillion of stimulus over the last 20 years? The answer is pretty simple: no. Now the next question is, for your house to go up from this, how much more stimulus is needed for the next 20? Or what is going to be the result of that stimulus when on an economy, when you leave a whole bunch of people out of that gain, and you concentrate wealth into a certain part of the population? You know what's coming next. You have to drive to socialism, and most people will vote for socialism because they're getting their pocket picked. And what will socialism do? It'll take more power into government, because but by the way, this is not a right-left argument. This is a system argument. But you understand its effects on people, and what people are naturally to do, because people will vote. If you can't feed your family, and all your rents just went up because housing went up because it was forced to, and your food prices went up, who will you turn to solve your problem? The same government who created it. And you'll embolden that power. And you see this throughout history. The signposts are everywhere. So I have such a hard time in these technical pieces of the conversation, because people are become fooled on the technical issue, and they're missing what's happening underneath. It doesn't matter. All of this is just noise.
So, I mean, this is something that Aaron's talked about in a couple articles, which is like reframing this to monetary entropy, right? It's just like a monetary system that's not consistent or known. I find that to be, an interesting way to frame it, and kind of really dovetails into like how Bitcoin fixes this. Is that, Bitcoin implements a system that's tied to the real world, that has a known monetary policy and can't be messed with. I kind of want to stick with Jeff because I know you have a hard stop. Maybe you can kind of just dovetail you know, into Bitcoin a little bit, and then wrap it up for yourself. So that way we don't have to keep you here beyond your time.
Sure. So I loved that article that Aaron shared it with me beforehand, and talked about kind of my book opening that up. I talk about a little bit in the book about entropy and systems and everything else, and what this looks like. But Aaron's article did a really good job of tying that to kind of where we're going, and why Bitcoin does fix this. I think the meme of Bitcoin fixing it, while we all understand it, hurts people because they're caught in a system, and they don't understand it how we understand it. We are, like, you're curious, you've gone down the rabbit hole, you understand all of the pieces, and you understand that climate change cannot be solved from a system that creates inflation. You understand every single externality that people are talking about today are actually a result of the system that they live in, but they don't see it, and they believe in these principles because they're easy to believe. And why would they be easy to believe? Same thing, if somebody can't feed their family, are they likely going to go down the rabbit hole and understand this? Or are they going to likely find a way to feed their family, including in a different country, turn to crime to do it? So if you understand how people are wired, and why we are wired to solve the short-term need first, before we think about what the system looks like, you can really easily see kind of how the system is going to make this worse and worse and worse, and how a new system is required. Um, and I go into, but there is nothing, no leader in the system, no anything else. The system, because and Ansel, you asked this question before, it must continue. There's nothing Powell can do. If Powell says tomorrow that he's going to tighten, and the Fed tightens, you're going to get a deflationary collapse, and governments all around the world are going to fail, and every bank will fail until the point where they nationalize them. And so that is a structural problem, and unfortunately they're trapped. So in fact, if you knew that, and you'd hoped that they were doing their job, what you would hope for is behind the scenes, they're driving the rails to Bitcoin, knowing that they can't message it, because if they message it, the whole thing fails. But in the background, that if they're not doing it, then a bunch of other states or countries are doing it faster, and that's what's going to happen, because that would be the best transition mechanism. But and I'll let Aaron finish with kind of talking about entropy and everything else. But here's, and I say this all the time, but this is where technology is taking us. There is a requirement that we have a digitally native currency that allows for deflation, that is, and also that is decentralized, because governments will not allow that to happen. Because governments expand their powers through inflation because it's a hidden tax, and they always have. And we will vote for that hidden tax because we don't see the short-term implications of the hidden tax. We say we get more, we think we get more for less, and we get less all the time. And so what Bitcoin does over time is, and there's a whole bunch of Bitcoiners that think the system would look the same. So on two sides, on our system today, looking at Bitcoin, there's a whole bunch of people that can't see Bitcoin because it's so, they think it's tinfoil hat and everything else. It's the best asymmetric bet of all time. And on the other side, on Bitcoin side, we think that government could look like this on a Bitcoin standard. And so then a whole bunch of people on the Bitcoin side say we need a citadel and we need this and everything else. And they do more to actually harm more people seeing Bitcoin because of that. Because nobody wants to leave a system that's providing an injustice and go to another system that's providing an injustice. Or they move from fear to hope. And Bitcoin is hope, but we need to think about that transition in a way, because the forcing function of a currency that allows for deflation forces governments to move inflation to essentially to taxes and tell the truth and get smaller as a result. That's what happens.
I think that would be an ideal, kind of end result of Bitcoin, but we'll see, how willing governments are to actually behave that way. I think
but just one quick thing, Ansel. Sorry, CK. Just on that, you give them too much credit. They're just people, and they're just government is just people. And today there's a whole bunch of people in more power than they should have because they have more taxes hidden in inflation than they have, and the system feeds back on it. You give them way too much credit. That's why I go back to a technology that empowers humanity to thrive and empowers people is never lost in history, because some people gain an advantage to move it forward. That's what's happening in El Salvador today. And it's going to happen over and over and over again. And what creates that power, what creates that people want to move to a better future. And so as leaders supplant power by talking about the truth, they're going to get elected.
I think that's a great way to end it. For you, Jeff, can you just plug yourself before you have to jump off here, and then Aaron, will turn to you.
Just the best place to find me is at Jeff Booth on Twitter.
All right. Well, check him out on Twitter. Go look up his book, The Price of Tomorrow. Fantastic read about a lot of things we talked about today. Jeff, thanks so much for coming on.
Thanks, guys. Good to see you guys.
All right.
Great conversation, Jeff.
Yeah, you too.
So I guess, Aaron, just to kind of reiterate the question for you is like monetary entropy. There's just I personally, I think Ansel coined this. He said, we kind of are living in this monetary hurricane where all of just this craziness is happening. It's destroying, the ability for us to allocate capital, and it's destroying supply chains. And then kind of brought to the forefront this idea of like entropy, and like there's just a lot of entropy in our monetary system, the way that we're trying to measure and communicate value. And then again, where does Bitcoin fit into this? So I know that's kind of long-winded, but I'll just give you the mic.
Well, hurricanes create entropy, right? That when they destroy capital.
They do.
Yeah. Okay.
They do. I mean, I think if we could walk away from this conversation and use this as an excuse to change, the narratives and the memes from inflation to hurricane, I think this is a win. And if it's an entropy or if it's a hurricane, whatever you want to call it, I think we're all on the same page as to what the implications are. And the implications are that there's a lot of cross currents, as we've been talking about for the last hour or so. And I think hopefully the takeaway here is that the debate is more nuanced. There's types of inflation, there's types of deflation, there's really good deflation, and there's bad deflation that's dead and capital destruction driven. And there's asset inflation, and they all kind of feed off of each other and they churn. Like you just said, I think a hurricane is such a great mental image because they just churn and they create this monstrosity. And what are some key attributes of a hurricane? One is that they're very hard to predict their path. Two, their winds and the cross currents go in multiple directions. Three, they're very destructive. And four, as Ansel, you just said, they create entropy. And so just to kind of recapitulate the thought of that article, Bitcoin information theory, and I'd point everyone to just listen to it to get a little more in the weeds, or read it to get a little more in the weeds. But the best takeaway from it that relates to the conversation that we're having today, and relates to a lot of the things that Jeff just discussed, which is that the best way that Bitcoin fixes this, and this is why it's so nuanced, because Bitcoin doesn't do so much. It's not just this thing that comes in and does all of these different machinations to fix the system and comes and saves the day like some superhero. And the Western society we live in is it's so embedded in our culture to look for active solutions, to medicate something, to do something, to do an action to fix something. Bitcoin, what it does at its best is get the hell out of the way. It allows value to be created, and it allows value to be exchanged from the consumers and the producers within society without muddying the water, without messing up the transmission mechanism, and without creating additional entropy along the way. And that's really all you can hope for a good money. A good money allows for a clear, because if a good money is a social technology, then and it's a social technology of communication, then the best you can hope for is a clear signal. I mean, that's what Claude Shannon's information theory is all about. That's where he came up with this concept of informational entropy, which is in dealing with a network where you're trying to get a message from one part of the network to the other without losing the signal along the way. And so Bitcoin isn't about the initial signal and changing the signal. It's about allowing the signals, which is human ingenuity, human innovation, to persist and get to their end goal, get to where they want to go without getting in the way and disrupting everything. And so I think that's really the main message. And Jeff, just to add one thing to what Jeff said, which I think is so key when we have this discussion, is to keep in mind that we're all looking at things at one point in time. And the point in time we are experiencing is now being compared to some previous moment. That's really how we can kind of understand the world around us. It becomes much harder to understand the kind of exponential impacts of a decision once you try to backpedal and look at how a decision that was made 30, 40, 50 years ago can compound both in a positive way and a negative way to destroy or create value. And then, so that's why Jeff, I think, said, and he actually, when I sent him this article, the only advice he said, the only thing he actually told me to change or really to clarify was to refer, when we talked about inflation, to clarify that it's not just inflation, it's not just what deflation could occur if we allowed it to. It's what the compounding effect of that could have been over the last 50 years had we allowed that. And so just because there's 2% inflation per year, and that might seem like only marginally inflationary, and that's why I didn't like this conversation where we try to change the narrative to inflation is only bad, or our current system is only bad if we get 5, 6, 7% inflation. Who cares about the number? It's about the destruction that's going on from the system that's creating it. And even 2% inflation can insidiously be very dangerous, especially when you start to think about how it's compounded over time. and especially when it's being compounded at the same time that we're having an informational kind of revolution. So that would be kind of the way I would sum it up. Hopefully I answered your question to some degree, CK.
Yeah, well, and again, like you didn't really talk about Bitcoin in particular that much, but Bitcoin is that solution to monetary.
The reason I didn't talk about Bitcoin that much, I mean, we can talk about all the benefits of Bitcoin. I think that's a different conversation, and I think, and I'd love to have that conversation. I'd love to, because I actually have a lot of thoughts about how some of the things that are going on within the Bitcoin system will improve the network effects of Bitcoin, and we can really get into those details. But I think at a high level, if you're trying to orange pill somebody brand new and you're trying to get somebody to really understand why Bitcoin is valuable, the nuance of it is at its core, Bitcoin is valuable because it allows the system to function without noise in between the signal and its endpoint. And that's why it's hard to kind of talk about Bitcoin in this context without talking more about the system itself and the system that's actually disrupting that signal, and then Bitcoin itself, because Bitcoin is a void. Bitcoin is kind of the nothingness that is everything. And I don't mean to sound all mystical with that comment, but I think that's why it's so complicated and so simple at the same time. And it requires a lot of deep thinking to really start to understand the meaning behind that and what that can actually accomplish for the world.
No, I think that was very well put. Aaron, where can people find you? I've been pumping you on Twitter for a minute now. I think you're criminally underfollowed. Kind of point people to some resources.
Yeah, so I'm a little new to the Twitter world. I'm trying to participate more for a lot of the reasons that Jeff just said, which is, I think this is important. I think it's important for my son, for future generations. I'm in a system that has benefited from a lot of the stuff that's going on, and I've seen it from that perspective, and it's been disruptive. And I'd like to do something more valuable. And so that's why I started putting a lot of these thoughts out. A lot of conversations you and I have had, CK, offline. And I look forward to writing more. I have a lot more kind of things in the pipeline, both related to some of these topics and also completely different. Like to your point before, that get a little more into the weeds of very specific things that are unique to Bitcoin. But yeah, you can find me the best way, like Jeff said for himself, the best way to find me nowadays is on Twitter. My handle is at Ludi Magister, LUDIMAGISTR. I go by Aaron S. is my handle, and yeah, that's the best way to find me. Our articles so far are on Bitcoin Magazine. The Bitcoin Information Theory is on Bitcoin Audible if you're lazy like I am and you prefer to listen to your content as well. Yeah, that's really it for the time being.
All right. Well, now that's already quite a bit. Ansel, you want to give your last word?
No, just thanks for coming on, Aaron. Nice to meet you. I can't wait for your next piece. I hope it's coming out soon because these things I started taking a bunch of notes this week when I was reading this second piece about the inflation pitfalls, or the pitfalls of using the term inflation. So it's very, very good. Thanks for coming on. I think it's important that we keep this debate going. Like I said a little bit earlier, that this episode we have deflationists on here, and this is the only show you're going to find that on, where you have people talking about a total different side of the topic. And yeah, I think this was great. Thanks.
Well, thank you both. It's been a lot of fun.
All right. Well, let's wrap this one. Bitcoiners, you can follow the show at Bitcoin Magazine. Go to bitcoinmagazine.com for all of the content referenced on this chat. And make sure you give us those 5-star reviews. Only place you get, the full circle on what's happening in the macro sphere. Only place that is dedicated to Bitcoin and macro. And yeah, I'll see you next time. Peace.